Hi, everyone. Now, the Dow Transport Index is lagging, and this could be an ominous sign to go slow at the moment. Now, it happened before in January 1973, March 2000, and now June 2024. And if you look at carefully, it's almost a 20-year cycle. So, traders, I think it's time to go slow. Do you think so? Let me know in the comment box. Now, before we go to detail, right, remember, disclaimer apply as usual, and do remember to really watch this to the end because I will tell you that the data may be saying that the market may pull back, but there are statistics showing that the market might be still bullish. So stay tuned until the end. Now let's understand what is the Dow Jones Transportation Average, okay, the DJTA, okay. Now this is something it's a price weighted average of 20 transportation stocks, okay, in traded in US. And it has been there since 1884, my God, okay. And this index itself, right, basically is the testament of the dominance of the railroads in the US transportation sector in the late 19th and 20th century. All right, the main thing is this, okay, this TA, okay, Dow Jones TA, is closely watched to confirm the state of the US economy, especially by the proponent of the Dow theory. So it does help the traders and investors to predict the potential changes in the market. But of course, it's just a one of the reference tool. It shouldn't be like a definite tool, right? So if there's a divergence happening, it usually indicates a potential reversal of the Dow Jones trend right at the moment. Now, one thing to note, all right, it happened before back in the 2020, all right, and that was where the DJTA closed at the then record high. Then after that, it started to go down before we saw the global crisis that happened. Now, of course, it could be a coincidence, but I think there's more in this. All right. So the thing is, when we see such a divergence, we need to be very careful. Now, this on the right side is the names of the 20 companies. Okay, so that you may notice it's like example Delta Airlines, Landstar System, and there's Rado rider system and so forth, Southwest Airlines. So these are pretty clear companies that really dictates the transportation of the US at the moment right now. So what is happening is that there is an article from Reuters recently and says that on the 2nd of June, there could be a potential of the market coming down. Why? Because there's simply a divergence between the transportation index versus the Dow, and the equity fund managers and some of the experts says that right there could be some reason for profit taking. Now, one thing to note, the restaurant, all right, is having some issue right now. Apparently, seemingly that there's more and more restaurants are now closing down, poor performance, and the thing is this probably due to financial stress. So one thing to note, the real medium household income is coming off, and you can see since 1990s, when the medium income is coming down, we can see that we have a pullback. We have a pullback and it leads to recession. Okay, guys, it's no joking matter. It does happen. So we need to be very careful on what we are looking at right now. So let me just make sure that I get the color that for you properly. You can see that it happens on a regular basis. And you can see right now the investment securities, okay, showing that right now the available for sales securities are all in huge losses. All right, there's a lot of losses. We talk about the technology stocks, we talk about the average up, they are not doing that well. So that's the reason why you can see we have this Hindenburg and Titanic syndrome going on because the stocks that the index is still at a high, but many stocks are now trading at a low. So this is not a good sign at all. All right. So one thing that from Barron's back to 2019. Okay, now back then, the Dow transports are getting hit harder than the Dow Jones Industrial Average, and they write about that. It seems to be a bad omen for the overall economy, but do note the date was 13 May. Now, one thing to note, okay, the stock market did not come down then. In fact, as has been mentioned several times before, it seems that the transportation average will move first downside, then followed by the Dow Jones. So it's like a predictive tool, but in advance, in advancement. So you can see that some people argue back and say that no, it couldn't be because now the economy has actually changed so much and we have very evolved. So maybe the TA itself is no longer usable because, like example, the entire S&P value of the communication and technology. The TA itself is only taking like 6.2% of the 8.2 trillion market value. So a lot of things we need to watch into detail. So let's just go into the charts to see this better so that you can make a decision from there itself. Let's bring the chart in. Now, the thing stretched all the way back to 1994, right? But then the data is too small to see, so I'm gonna just skip it. Okay, let's come to the most recent, all right? Let's bring up to like now. Now, like sample, like here. Now you can see that the one in candlesticks is the Dow Jones Transportation Average, all right? The one in blue is the Dow Jones itself. So you can see that we have a very incredible sign back in 1998, whereby when the TA start to trade down, right? Just weeks later, the Dow Jones also came off. And once the TA has bottomed out, that was where the Dow bottomed out. So you can see that the relationship is pretty direct, right? So that is back in 2000, year 2000. So of course, you may argue that now technology have improved so much, but if you look carefully, what happened back in the 2009, you can see that the TA has already started to fall as early as the May period, okay? And then what happened? When the TA fell, the Dow Jones really collapsed, okay? And when they bottom out together, that was amazing. Look at it, oh my God. So this could be very helpful because if you want to look at bottoming out signal, you can see that it does helps. And the one thing to take note is the RSI at the bottom. So you got my point. So it seems that right once the TA is at the bottom, when the RSI is calling for it, it does have a bottoming out signal. So you move forward the tape and we look carefully right now. Let's take a look. You can see that it's again incredibly accurate, guys. This is really very accurate. So that's the reason why I only hold on to this video, because I'm not going to tell you the sell side, I'm telling you the buy side too. So it's very clear that right most recently in 2023, 24, we have that bottoming out on RSI, and isn't that this is where it is, correct? So if you look at the Dow at the moment and break Dow Jones right now, gosh, guys, we have the perfect bottom out of the Dow, with the Dow basically went all the way back from 35,000 all the way to 40,000. So this is why I think this video is so important, because it gives you both sides of the coin at this moment. Now, one thing to note now, we have our divergence. That's a key point for this video. You can see that the Dow Jones is still maintaining on this upside, but the TA has already went down. So that's the reason why I'm kind of bearish at the moment. I believe that the Dow may pull back a little bit, maybe like 800 points from where we are right now. So the Dow closes at about 38,600 last Friday. So I believe that an 800-point pullback could send the Dow back to 37,800 level. Okay. All right, that could be possible. But of course, the target that we are looking now to buy back is about 38,160. That is our TA level to buy back based on our system. I'll show to you shortly. So guys, take a look at that. So one thing to note about this chart here. So although the statistics shows that it seems that the TA is going to help, but someone, okay, Mark Hubert, he came in and said that, well, he did some research. He feels that, right, it doesn't really tell the truth about this particular narrative. In fact, he did a research. He feels that, right, Dow actually does better when the TA actually is lagging. So that's another side of the coin telling you that the Dow Jones may not really go down a lot. And to me, as I said earlier, if there's going to be a pullback, I will want to buy back at the point whereby the TA is going to be at RSI at the low end, and I will be buying from the bottom. Now, if that really do happen, that means that we're going to catch the Dow selling now at the moment, and then we buy it from the bottom. So guys, those my naysayer, please understand this video. I'm giving you both side view for today. Now, to wrap it up, let's look at my indicator right now. You can see that my indicator still showing that there's downside on the Dow, but you can see the boys are buying in. This is interesting. So the momentum is picking up, that's for sure. So I suspect that if the Dow do ever come down to about 38,160, which is happened to coincide with my pivot level today, then I think this is a very good level to buy back your short position and possibly looking for a reversal, because this is the MA 200, which is a very important average to watch out for, because the Dow has came back from 40,000 all the way down. I think coming down to this point will be a good level to do some buyback for your shorts. Okay, guys? So you heard me. I hope you enjoyed this video. Let me know in the comment box. This is Cal signing off. Take care. Bye-bye.